Hey guys, Steve Simpson here with Central Florida Property Management. Hope you guys are doing well. It is October 29th, so we are, 5 days away from the election. So I figured for that timing purposes, I'd do a little, not political, but a video that might have to do with the election. A couple of months ago, I did a video about the owner-occupied home tax exemption when factoring that in how to deal with your rental property. And to kind of go along with that, I think when you have elections, especially when you have elections that you think might potentially raise taxes, it's another good time to think about the timing of your investment portfolio, in this case, your real estate. And what do I mean by that? Well, again, I don't mean to get political about this, and I'm not trying to pick one side or the other. Big picture is, if you have been considering selling your investment property, or if you think you might want to sell your investment property in the next 2 to 3 years, and if you also think, based on the election outcome, that your taxes might go up, you might want to consider selling your property sooner than later. Capital gains taxes obviously is the biggest thing that affects the sale of property. Just to put an example behind it, if your current capital gains rate goes from 20% to 35%, and you have a $100,000 capital gain on your property, that's $15,000 of capital gains taxes that might go up depending on what happens with the political climate over the next few years. So, a lot of people have plans in terms of when they want to sell their properties based on their retirement, maybe their kids going to school, which is great. It's a good plan to have. For maximizing your income, I would recommend factoring in the political environment and really the future tax rates you think might happen involved with those plans. As an example, if you have a kid about to go to college, you've been saving, you bought an investment property, waiting for him to go to college to sell it and pay for his college. Well, if he's 3 years out from going to school and you think your taxes are going to go up or capital gains rates specifically are going to go up in the next couple of years, you might want to sell it now and effectively make more money on the sale than if you waited to sell it in 2 years. So I know it's kind of obvious, but it's just a reminder to you guys, something to keep in mind during this potential change in political winds. If you guys have any questions or comments, love to hear them. Please leave them below, and hope you guys are doing great. Thanks.